Well, welcome everyone. My name's Tom McCarthy. I'm the founder of McCarthy & Cox, a firm in Marysville, Ohio that focuses on providing retirement and estate services to our local community. Many people want to know a lot of times what it means for us to be independent, because we are independent. What it means is we're free to give you our best advice, but we don't operate alone. We're really blessed to be affiliated with a national firm called Commonwealth that provides us access to expertise in many areas, from estate planning, tax planning, insurance planning, investment planning. And today we have one of those experts with us. His name's Brad McMillan. Brad's somebody you may be familiar with because he's been to our workshops here in Marysville a couple of times. And he's a trusted advisor to us and many other people in the country in providing us his insights into where the economy is. So Brad, I don't want to set you up here with expectations that are unreasonable. Your crystal ball is probably as cloudy as everyone's, but you usually have some unique insights. And I hope you'll talk today because a lot of us are really struggling with making sense out of a market that plummeted in March at the fastest rate ever, only to bounce back 20, 25%. So we're still down, but not near as much as you would expect, especially with jobless claims going through the roof, corporate earnings becoming non-existent, risks of debt foreclosure. People are scared, and locally, that's impacting a lot of our businesses, including our major employer in the area, Honda. So it's confusing, lots of information, probably more information we can ever digest, but no certainty or clarity. So we welcome you. We appreciate you joining us. And just so everyone knows, and I'm gonna let Brad take off here, because we only have him for a few minutes. We have him till 12:30 today. So if on your screen, if you look on the right-hand side, there's a section that says handouts. And if you click on that handout, you'll see information for today's session. As Brad talks, if you have questions or concerns you would like to advance to him, please use that handout. There's a link that you can link and send us your questions. We'll put them to Brad. There's also going to be a way for you to subscribe to Brad's blog. I think you're going to find today why we watch him every week and we look for him for guidance. And I think it'll be valuable. And yes, it is free. So with that, Brad, it's all yours. Thank you for being here today and letting us host this webinar. It's really an honor to do so. Thank you.
Thank you, Tom. And of course, it's an honor to be here. Thank you for having me. I always say it's an honor, and it's true, but it's actually a much bigger honor to be invited back. So thank you for that. What I want to talk about today is obviously everything that's going on, but more than that, I want to give you a way to think about it. And I think the big question we have to ask ourselves, because this is how the stock market works, but it also applies to our lives and the situation is it getting better or is it getting worse? And that's the big overarching question that we have to look at when we consider this situation. Beyond that, I think there are three different things we need to consider. The first is the pandemic itself. The second is what that's doing to the economy. And third of all, that's what it's doing to the financial markets and to your investments. So we're going to touch on all three of those. So let's start with the pandemic itself. Is it getting better or is it getting worse? Well, the truth of the matter is right now it's getting towards even. And that's actually a tremendous advance over where we were even a week ago. The first thing I am tracking is how quickly the cases are growing day to day. And the best way to do that up till now has been on a percentage basis. At one point, cases were growing 30 to 40% a day. That means it doubles every couple of days. And obviously that's terrible. But with the social distancing we've been doing, and by the way, Ohio has absolutely been at the forefront of this. They've done a tremendous job, but we've seen that come down to about 5% a day. Now that's still too fast, but it's significant progress. And the expectation is we're going to continue to see it drop. It's also a break point in that now that it's down to about 5% a day, we're starting to see the new cases per month or per day level out. We seem to have leveled out at or just under about 30,000 cases a day, which again is too high, but it's much, much better than what it has been. And now that that seems to have leveled out, we can work on taking it down to zero. What I've been saying about this is we're at the end of the beginning stage of this because we seem to have the spread rate under control. Now we move into phase two where the case growth goes to zero. That's a very much better place to be. So we are making progress. Things are getting better. In other words, we know what to do, we're doing it, and it's working. So that's the good news. Some of the bad news is with the economy. We've seen about 20 million people lose their jobs over the past 3 or 4 weeks. That's a disaster. We're seeing the economy the economic damage start to mount. We're seeing businesses shut down, people laid off. You know, there's a real fear out there that this is going to morph into a depression. But there's some good news here as well. The best news is that the federal programs that are out there are specifically designed to prevent a depression. Yes, we're going to see damage. Yes, we're going to see a recession, but those programs are big enough and they are properly targeted to mitigate the damage in the most effective way possible. The government is actually doing something good here. They're doing the right thing. Now, it's not going to be perfect. There's going to be teething troubles, and we're already reading about those in the paper. But at the same time, we know that the checks are going out. People are getting checks. Businesses are getting checks. In other words, this is not just talk from Washington. This is actually translating into money in people's and companies' bank accounts that they can spend. Not everybody, it's going to be uneven, it's going to be slower than we would like. But even as the damage mounts, we're also starting to see the mitigation mount as well. So again, we're not where we want to be, but we are making progress. Are things getting better or getting worse? Well, they're getting worse, but they're getting worse at a slower rate. And we can see that at some point in the not too distant future, they're going to start to get better. And that's basically what we are getting from the stock market. The stock market's initial reaction, you saw the drop. It was the fastest drop we've ever seen, one of the largest drops we've ever seen. The stock market was pricing in a depression. And then we had the actions by the Federal Reserve. We had the actions by the federal government. And a depression pretty much moved off the table. And we saw the market bounce back. And what we're seeing right now is we are seeing the market try and figure out just how bad this recession is going to be. That's the question. We don't know. And frankly, we're not going to know for a while. So the market's going to bounce up and down. We're certainly going to see some more volatility. In fact, right now, the market is expecting a fairly rapid recovery. They're expecting to see companies make more money in the first quarter of next year. So the market is saying everything's going to be okay. I hope the market is right. I fear that it's not. But nonetheless, the market is saying things are indeed going to be getting better. This is not the zombie apocalypse. That's not a bad place to be. And that's something we have to keep in mind because in every single one of these areas, the pandemic, the economy, and the markets, we've seen real progress. We've seen things getting better. This is not the zombie apocalypse plague. We will get through this. Now, that said, now we're starting to talk about how do we reopen the economy? And to think, first of all, let's take a moment and look back and say, wow, that's an amazing thing to be able to say. 2 weeks ago, we were talking about everybody in the country catching the virus. We were talking about hundreds of thousands of deaths. Now we're saying, well, how do we reopen the economy? That's tremendous progress. The problem is that what we're going to need to open the economy more than anything else is widespread testing. We're going to need 1 million tests a day minimum so that we can keep track of and step on any new outbreaks. We don't have that yet. Right now, we're seeing testing capped at about 150,000 a day, which is not where it needs to be. That's the next challenge to be overcome. And fortunately, we have some time to overcome it. It's going to take us probably 4 to 6 weeks, maybe more, to get the new cases number down to zero. And we have that time to build up the testing capability. The good news is we're getting there. The bad news is we're not there yet. That being the case, we can actually see the end of the tunnel at this point. We're still in the tunnel. I don't want to minimize this. We have to keep doing what we're doing. It stinks. I'm stuck at home too, but it is working. The economy is on life support, but the good thing about life support is it keeps the economy alive until it can open up again. We know what has to be done to open the economy up, and even though we haven't done it yet, we're in the process of doing it. So I guess to conclude, I would just say this. This is a tough time. This is a tough time for everyone. It's not going to get any easier for the next couple of weeks. But at the same time, we can see real progress. We can see that, in fact, things have stopped getting worse as far as the pandemic goes, and we can reasonably expect them to start getting better. We have seen things that are going to get worse for the next couple of weeks for the economy. We can also see that help is on the way. We can see the stock market expecting things actually to heal fairly quickly. And that's a good thing because the market usually has, it's not always right, but it's got a fairly good handle on the direction of things. And behind all that, we have any additional support that's necessary from the government. We have the American people who are going to get through this just as we're getting through this now. And the narrative that I see in the headlines and that I get from some questions is this really it? Is this the end? No, it's a problem. It's a big one, but it's a problem that we will likely be moving towards the end of in about 3 to 6 months. And at that point, we'll be able to move on. They call me Eeyore at the office. I faced accusations of optimism recently. I don't think I'm being optimistic. I think I'm being realistic. I can tell you a story where things get worse, but that's not what the data is telling us. I can tell you a story about how we have a depression, but that's not what the data is telling us. What the data is telling us is that we are having a tough time, but that we know what to do. We are doing it, and it's working. And with that, I'll be happy to take questions. Tom?
Well, Brad, we've got a couple of questions that have come in, and I expect we'll have a few more. One of the questions we received was, do you have any opinion on which sectors of the economy we could expect to come back online sooner than others?
That's a great question. We're already starting to see recovery in some of the areas that people can work from home on. So, for example, in the financial sector, got hit less. When you look at retail, that obviously got hit harder. So it's really going to depend on how outward facing the business is. So, for example, utilities are going to continue to do well. Retail, not so much. That's going to be a tough time coming back. Airlines, just ask yourself, when are you going to be prepared to take a flight? On the other hand, when you look at something like the tech sector, which has continued to do well, Amazon is actually hitting all-time highs. They are actually thriving in the new world. I suspect we're probably going to see grocery stores continue to do well because everyone has rediscovered the virtue of eating at home. On the other hand, I'm not sure restaurants are going to come back because if you can only have half as many people sitting in a restaurant because of social distancing, are you willing to pay twice as much to go to that restaurant? So no good answers, but the real question is how publicly facing is the industry?
Another question, there's some talk that this first stimulus was a good stab at it, but there's likely another stimulus, maybe a big infrastructure project in the works. Any thoughts?
From what I understand, the initial loan/grant program to businesses is already pretty much tapped out, and Congress is trying to set up another $250 billion. So I would say not only is it likely, it's actually underway. You could certainly make a good case that infrastructure would be a natural for this kind of situation, taking unemployed people and using them to improve the infrastructure, which we desperately need. It would certainly, it would work for the Republicans, it would work for the Democrats. I haven't heard about anything like that, but I know it's being talked about, it's in the air. So there will definitely be more stimulus. What form it takes, I don't know. But the bottom line is the government is going to do whatever it takes to make sure that things don't turn into a depression. So that would be a good way to do it.
Another question was the Federal Reserve is doing all sorts of things and spending money, and how is that going to help us? And will it hurt us in the long run with higher inflation?
It's a great question, and I get that question a lot. The way to think of inflation is this. There's a certain amount of money chasing a certain amount of goods, and if the amount of money goes up, then more money chasing the same number of goods means you're going to have to pay more money for the same good. So that's what inflation is. What we're seeing right now is we're not seeing the Fed put money into the system on top of what's already there. We're seeing the Fed and the federal government put money into the system to replace what's not there. And that's a big difference, because that means the amount of money chasing the goods is still the same. So there's no inflationary impulse right now, because the money that's being put in is just replacing the money that's not there anymore. Now, if the Federal Reserve and if the federal government were to continue spending money after the economy came to life, then yes, we would certainly have to worry about inflation. But it's not a problem right now. In terms of the longer term problems, you can make a pretty good case that the debt will indeed be a longer term problem. But the problem is this: Japan has been doing this for 30 years, and they haven't had all of the problems that would be expected. So there's an empirical reason to believe we can keep doing this. Europe has been doing this for 10 years, and again, they haven't seen those problems. Even if those problems do start to occur, though, I think what will probably happen is you would see the Fed essentially forgive the debt, because the Fed already holds trillions of dollars of US government securities. Could just forgive it. It wouldn't matter if they did it once. And that's all they would need to do. So is it a problem? It's not a problem right now. Could it be a problem? It could be, but we've got good reasons to believe it won't be. And even if it is a problem, it's a solvable problem. So that's not our immediate problem.
Another question we received, these sort of events tend to have ways of changing our lives. I'm trying to read this here. How do you expect that this pandemic will have lasting effects and change things like supply lines, supply chains, and just personal behavior?
Well, from the economic perspective, when you look at how the global economy has been built over the past 30 years, it's been optimized around cost. It's been optimized around efficiency. In other words, every country said, we're going to go wherever we need to have the product made the cheapest we can. That usually meant China. And there was an assumption that everything was going to be available, that there were going to be no disruptions. Well, we now know that disruptions are going to happen. So you're going to see companies bringing supply lines back. You're going to see a much broader definition of national security. So, for example, Apple's going to be manufacturing a lot more in North America. So is Ford. So is GM. Not because they necessarily want to put the jobs here because it's more expensive, but because they can't afford to have their business blow up because of a disease or because of tariffs or anything else. They're going to put it here because they have to. And that's going to be good from a jobs perspective, but it's going to make things cost more. Because the good thing about sourcing everything where it's cheapest is you can keep costs very low. You can keep prices very low. And if you put it in countries with higher costs, obviously you're going to have to charge more for that product. So we're going to see higher inflation. We're going to see things costing more. We're also likely to see more jobs and higher wages. Kind of a trade-off both ways. In terms of how people act, well, I think face masks are pretty much a given at this point. New York is apparently now mandating them. You see them in Asia all the time. Now you'll see them in the US. I think you're going to see professional sports, I think, is going to change. It's going to be harder to get a stadium full of people. I don't necessarily think that's going to derail professional sports, but it's going to be a big difference. Higher education, you've had a lot of students who are now doing distance learning. Does it make sense for them to go back to a residential college? I think you're going to see tremendous changes in the higher education industry. Same thing is true for office space. So for example, I've been working at home. Do I really need an office? Does my staff all need offices? You're going to see the real estate market change significantly. But the biggest changes we're not even going to see for another 5 to 10 years because we're too close to them and it'll take time to play out. But those are some thoughts.
Yeah, Brad, it's kind of funny you mentioned about office space. McCarthy and Cox renovated our offices last year. We doubled our footprint, and now we're all working from home. So
there you go.
was a good investment in the community, and we look forward to working back, elbow to elbow, but it's probably going to be a while.
Well, that's the thing. It's everybody's going to keep adapting, but it's the 5 to 10 years that things change.
So an industry that cuts close to home for us, Union County is the home of Honda of America, major manufacturing facilities. The auto sector has been as bad as anyone.
Yep.
I've got a question here from a Honda associate who says, I'm not old enough to retire. How safe is my job going forward in this industry?
I would say probably reasonably safe over time. I don't know what Honda or any manufacturer is going to do in the short term, but because of the shortened supply chains, as we talked about, you're going to see any country that wants to sell in the United States, they're going to have a very significant manufacturing footprint here. And so things that are made at Honda in Ohio, I am guessing, are going to continue to be made there. And in fact, Honda, if they want to expand sales in the US, might have to start making things here that they make in China right now. So I think Honda is a large company. It's a very secure company. The US will continue to be a major market for Honda, maybe more so than Japan. So I would say that given all of that, I would expect Honda and other foreign manufacturers to continue to locate business and jobs here in the US. I think it just makes sense from their perspective.
Okay, we have another question about your sense and the outlook of housing. It's been surprising that housing has remained strong, but at what point will the stay-at-home orders mean that residential real estate, will likely start to suffer?
Personally, I think housing is going to continue to do well for two primary reasons. The first is demographic. We're seeing the millennials start to move into their prime home buying years. They now have jobs. Up until recently, they have jobs, they have money, they have kids. There's a narrative out there that millennials want to live in apartments their whole lives. I don't think so. I never thought that. And now we have the additional factor of the pandemic fear. Would you rather be in a single family house with more space, with nobody else using the stairs and the elevators, or would you rather be in an apartment? I think this is actually going to be a tailwind for housing going forward. When you combine that with the fact that interest rates are very low and likely to stay low for years, I think it makes a very compelling argument for residential housing. You have more demand, you have more effective demand, and you're going to have eventually, not at the moment, cheaper mortgages. I think housing's going to do just fine.
Well, Brad, I know we're getting close, but I got three more questions that have been popped in. One, there's concern that if we go back to work too soon, the virus may hit us again and businesses would be forced to close once again. Can we really afford to restart twice?
It's a good question, and that's why I say testing is so important. What we want to be able to do is, now, once we have the virus under control, we want to be able to switch from isolating everybody to isolating people who have the virus. The only way we can tell who has the virus is to test and test and test. So if we test and test and test, that will let us do that. Otherwise, you're right, that's a real risk.
There's a question that comes, and I think this is probably out of that article in the Wall Street Journal today, talking about Smithfield Foods, which I don't know if you saw it, but it's owned by a Chinese firm, and they're closing their pork production. So a lot of food's not going to get processed. The question is there, what concerns should we have that the largest food processors in our country are largely foreign owned, mainly Chinese?
Well, in terms of the ownership, I'm not concerned because they can always be forced to sell. So that's frankly not a concern. The broader concern here is, as we shut these sorts of things down, is that going to affect the food supply? And the answer so far is at least no. We see the food supply chain coming in. There may have to be some measures taken to ensure that the staff there is virus-free. But again, that can be done if it becomes a security issue, and it will be done. I'm not worried about the food supply chain right now. I'm not worried at all about the ownership of those companies. Doesn't really matter.
Well, Brad, I know we're up against the time limit that you were so graciously able to give us, and we really appreciate your presentation. And as kind of I expected, you were on point and not afraid to take a tough question, and we really, really appreciate that. I just want to remind people on the webinar at the bottom right, there is that link for handouts. And I encourage you, if you found this to be helpful, if you thought that Brad's candid comments and observations were worthwhile, and I think I know I did, I would encourage you to subscribe to Brad's blog. It's free, and you'll get to hear from him on an ongoing basis. Brad, I hope you'll express to everyone at Commonwealth how much we appreciate all that you do and Commonwealth does to help us serve our clients and our community better. You certainly lived up to that again today. And I hope you and your family stay well, stay safe, and we hope to see you again soon.
Thank you, Tom, and thanks everybody for listening. I will say this, it's advisors like Tom and Jim and the team that really make what I do worthwhile. We work with the best people in the world. So thank you. Stay healthy, stay sane. God bless.
You too, Brad. Thank you all. And with that, we'll conclude our webinar today. And we look forward to hearing from each of you. Feel free to send us your emails. There is that link in that handout. We're here to serve you. Thank you. And for that, have a great day.